Hello and welcome to this Friday's morning market briefing. We've got a lot to talk about, but firstly, the Bank of England holds interest rates at 5.25% in a finely balanced decision, as well as that, the US to redirect Patriot air defense orders to Ukraine. We've got lots to talk about on the charts. Also, with lots happening on the economic calendar, but we'll come to that near the end, so make sure you stay around so you can see that. Before we get straight into it though, make sure you subscribe. But the first article to talk about is to do with the Bank of England. Now, the Bank of England has now announced their decision to keep interest rates at their multi-year high level of 5.25% just weeks before the UK go to their July 4th election. This comes as a big loss to Conservatives' hopes for a boost to personal finances. Now, of course, not only have we been covering the topic of the British general election to great detail, but also, of course, a key topic that we cover on this channel is what the Bank of England's doing with their monetary policy, with their outlook, that kind of thing. Ultimately, because that is what is most important to us when we're looking at things like the pound or other, assets related to Britain and that kind of thing, or even gold and the dollar, which of course, gain their value from the kind of other powerful currencies around the world and what's happening to them. I mean, the pound is one of those powerful currencies, and that's why this is, of course, a very important article and topic to cover. Now, more, to do with the Bank of England. Well, we've covered the Bank of England extensively, of course, as I've said. And what's really been going on with the Bank of England has been something that's been very interesting. As, of course, different central banks around the world, or at least those kind of advanced economies central banks. So when we're thinking of those economies, generally when we're looking at, this topic, we're looking at the Fed with the US, we're looking at the Bank of England with Britain or the UK, and then we're also looking at the ECB with the Eurozone, and finally Bank of Japan with Japan, with all of those central banks representing kind of their strong currency, which has great value in the world, and represents their advanced economies. And so with that, of course, we're checking what's going on with the currencies and that kind of thing. But that's aside from the point. Ultimately, what we've seen kind of take place over the course of the last year and last few months is a great change in the monetary policy outlooks between those different central banks. And as a result of that, we've seen ranging exchange rates between such nations with their respective currencies. And that's why this topic is so important to, of course, cover with this very important interest rate decision, which we've been looking forward to throughout the entire week and kind of been looking at different data and how that might impact this decision from the Bank of England. So as for context to kind of what's happened over the past few months with such central banks, well, ultimately the Fed started off the year with this very dovish outlook. That was coming from Jerome Powell, but also others from the Fed who were, expecting 0.25 percentage point rate cuts this year. In fact, traders, investors were expecting 6 to 7 of those interest rate cuts throughout the year of 2024. And, that was kind of far more dovish than what we were hearing from the Bank of England. Whilst the Bank of England at that time was actually expecting to hold interest rates an extremely long time, possibly until July, August, that kind of thing, which at the time was very far away and, definitely long behind the expectations for the ECB and the Fed, as the ECB was being expected to cut interest rates as early as May. And, the same was for the Fed at the time, but definitely the ECB was a central bank being expected to cut interest rates very, very early as a result of kind of, slowing growth and that kind of thing, whilst inflation was dropping faster than other nations. What we have seen, though, change quite dramatically is, of course, the Fed has now shifted to a very hawkish monetary policy as a result of persistent inflation, as inflation has really remained above that 3% mark and really hasn't made its way down to the 2% target levels that we're seeing now with Britain and also with the Eurozone. And as a result of that, the Fed is now maintaining a very hawkish monetary policy. We're not really expecting any interest rate cuts until earliest, maybe September. And even then, we're only expecting one rate cut from, the Fed this entire year. In contrast, though, what we're now seeing from the Bank of England is this kind of more dovish monetary policy. This does, of course, contrast with the decision they made yesterday, which was to keep rates at their all-time high level. But ultimately, it's the rhetoric that we've got to look look at and understand. As the Bank of England, well, Andrew Bailey, the governor of the Bank of England, did come out following this decision, kind of praising the Bank of England's efforts and the government's efforts to, of course, bring inflation down to that 2% target, as that's what we covered in yesterday's morning market briefing, with Wednesday's inflation figure showing that for the United Kingdom, inflation had finally fallen to the 2% target figure, which is a monumental undertaking, but of course does hide, some of the kind of background figures which don't represent as optimistic a picture. Nonetheless, that was a very significant move, where it's a very significant figure. And so as a result of that, it has led traders to start to expect this more dovish monetary policy to start being, used by the Bank of England. And as a result of that, interest rate cuts were expected. And, some were even expecting interest rate cuts yesterday in yesterday's market monetary policy decision. We did not see that, however, as I've just said, but that nonetheless was a dovish decision, because ultimately, now we're just expecting that rate cut in August, it does seem like. With the decision being one which was finally balanced with 7 rate setters in the Monetary Policy Committee, representing a majority over the 2 which called for rate cuts. It must be noted that this decision was one which the economists did expect, and does ultimately leave interest rates at their current 16-year high. It did, however, shock some investors following the inflation figure released on Wednesday, which did in fact show that the level of inflation had fallen to the Bank of England's target of 2%. That said, the services inflation figure, which also was released at the same time, did also come in higher than expected, sitting at 5.7%, pardon me. Prime Minister Rishi Sunak had hoped that this meeting would see the Bank of England cut interest rates and therefore provide extra credit to his government for bringing down inflation. As for the next interest rate decision, which is set to take place on August the 1st, traders are pricing in more than a 40% chance of a rate cut, which is up from a third before. Now, the meeting minutes did, however, show that those in the Monetary Policy Committee, which voted to keep rates at highs, did also see that they were getting very close to a rate cut. The Bank of England Governor Andrew Bailey reflected on the position of inflation and the Monetary Policy Committee decision by celebrating the fact that inflation is heading in the right direction. That said, economists and traders still believe the August rate decision will be very close. So it will be very interesting to see what does happen with that August rate decision. Of course, we'll be covering that when we come to it. But in the meantime, we must be looking out for all these kind of key economic data points and economic data releases and news points, even, as we always do. That's all to talk about on this article, though. Next article to talk about is to do with geopolitics and world tensions, which is, of course, another topic which we're always covering on this channel. With the US now making the decision to pause the deliveries of Patriot interceptor missiles to other nations in a new effort to fast-track orders for Ukraine. This comes as the front lines in Ukraine dramatically heat up, and Ukraine is forced into a defensive posture after going numerous months without support from the US. And that was, of course, a topic which we covered at the time. We noted at the time, of course, the kind of calamity within within Congress, with, of course, the House of Representatives fighting over bills and that kind of thing, with the kind of more hardline Republicans shooting down any attempts really to help fund Ukraine, and as a result kind of creating this chaos which somewhat still exists, but obviously has somewhat also been tampered out as we've started to see these kind of aid bills flow through to Ukraine once again. And we've started to kind of hear this once again very positive rhetoric about supporting Ukraine from Congress, from the Senate, and from Biden, which kind of has remained throughout, but ultimately we kind of have started to see this coming back to supporting Ukraine over the past few months. Now, ultimately, in terms of what this might mean, well, ultimately, the reason why we cover it is because it affects world tensions. World tensions drives key assets such as gold, even the dollar, bonds, and even key indices. And as a result of that, we have to understand what's going on, what's driving world tensions, what may be bringing them down. And these kind of topics of aid bills and, or even bilateral agreements, or, even mutual aid assistance and programs and that kind of thing, partnerships, such as what we covered yesterday with with Russia and North Korea, that dramatically drives world tensions higher. And something like this as well kind of adds to the flames. Whilst it may be, justified and very, useful, ultimately, we have to understand it in its world tensions context, which would be that this probably does add to world tensions somewhat. And, especially when we then factor in the fact that this could anger certain partners which were hoping for those air defense orders to reach them, and instead this is going to a different partner, possibly that could create some extra issues and conflicts. These are some of the thoughts that might be going through some traders' heads, that especially those that trade gold and other safe haven assets, as ultimately they factor in, they price in this new news to do with world tensions and Ukraine. So definitely think about these topics through that kind of perspective, through that mindset, and hopefully that starts to play into the ways that we can view these safe haven assets and the way that moves might be made with these safe haven assets. Now this comes, pardon me, I've already said that, with the US National Security Council spokesperson John Kirby saying that the US had made a difficult but necessary decision to prioritize Patriot missile deliveries to Ukraine, also noting that this decision demonstrates the US's commitment to supporting partners. This also follows Biden saying last week that he had secured vital commitments for the delivery of additional air defense systems to Ukraine. According to Biden, several other key nations had also agreed to send Patriot and other air defense systems to Kyiv. Lastly, to note, Biden and Zelensky have now signed a 10-year defense pact. So that's kind of, ending off there with the defense pact. That is something which, of course, we have to factor that into the way that might affect tensions between Russia and the US. Arguably, that's not going to affect it as much as, things already have escalated to, but still, I think understanding the way that these long-term defense pacts may be understood could also add to that, and that sort of thing. I'm sure you understand what I'm getting at, so definitely factor that in when you're thinking about this topic especially. That's all to talk about on the articles, though. Next to talk about, like always, is the charts, where quite a bit is happening in contrast to what we were talking about in yesterday's morning market briefing. As like always, we're starting on the Dow Jones, the US 30, where things are kind of heating up. Now, in yesterday's morning market briefing, I did note that price hadn't moved much for the Dow Jones over the course of yesterday, as basically, actually not over the course of yesterday, but over the course of Wednesday, as ultimately, whilst price had made its way up to these this kind of key area of liquidity, this key zone, price had kind of stagnated, stalled out, and had kind of moved sideways for quite some time, as we waited for data, or we waited for some news to come out which might push either the US 30 to the upside or downside. At the same time, when we kind of see this consolidation to the top end of these liquidity zones, one could arguably note that this is kind of a sign that we're about to break out to the upside, as orders are accumulating to push price higher, or we're waiting for a certain time zone for price to then push higher. And that's seemingly what has now taken place over the course of yesterday, with price spiking and pushing through this key area of liquidity and resistance over the course of the US market yesterday, and as a result we are now holding above those kind of recent highs around the 12th of June and even the 7th of June, and now we're up around levels not seen since the 23rd of May. In fact, over the course of yesterday and in the very recent price action, that kind of spike to the upside that we have seen now take place did allow for price to wick into this key area of liquidity, which has previously acted as a strong area of resistance as a result of being an all-time high level, then acted once again as another area of resistance, then support, then resistance once again, and then more recently as resistance once again, and now it does seem like we're using that area once again as an area of resistance. So it will be interesting to see whether, because that area of liquidity has now kind of been tapped, whether we will now see this kind of sell-off take place as orders, are sold off, and we do see kind of price reclaim that bullish movement. So definitely keep your eyes on the dollar, not on the dollar, that's what we're covering next. Definitely keep your eyes on the US 30, as today we are receiving, one bit of US economic data which could affect the the US 30, which is the manufacturing and services figure. So definitely listen out for that as well, always. But yeah, not too much to note for the US 30 apart from that. Next to talk about though is the dollar, which actually is making some very, very interesting moves. And over the course of yesterday, after price had interacted with this 38.20, which we did note in yesterday's morning market briefing, price has now swung to the upside. Now, a key thing that I did note in yesterday's morning market briefing when we were talking about that 38.20 was the fact that we were kind of touching it for the second time, and it looked like price was kind of consolidating within it. So it really didn't look like price was going to utilize that level for a bullish upswing. It seemed far more likely that the kind of key liquidity zone of the 50% and that, that key liquidity zone around the 50% and around the 105 territory seemed far more likely for price to make its way down to that level before then swinging higher. Instead, though, we have seen price react to that 38.20 Fibonacci retracement level, and now we are on that kind of upswing movement, making our way to the highs not seen since the 14th of June, and that's kind of the regional high, the recent highs. So it will be interesting to see now whether we do have the momentum to break above that key level and make our way up to the kind of Fibonacci extension levels around the minus 27.2 and the key liquidity zones around there. So definitely keep your eyes on the dollar. Next to talk about is Euro USD, which of course reversing the image for the dollar. We have seen this kind of sell-off take place now for Euro USD. Now, we have noted previously the kind of levels which price can make its way down to, which is of course this key liquidity zone which price recently interacted with on the 14th of June. And of course below that we then have the very bottom of the market not seen since the 16th of April, which is down and around this kind of Fibonacci extension level, which I drew out with this Fibonacci tool. Ultimately though, price on that Fibonacci tool, didn't interact with any key levels. On the more recent kind of swing to the downside and then retracement though, arguably price interacted with that 50% Fibonacci retracement level inside that key liquidity zone very recently around the 18th of June, and since then we have seen a sell-off take place. So quite possibly we could be making our way down to that kind of key Fibonacci extension level. So definitely keep your eyes on Euro USD. I think the most important though to talk of throughout for the day is pound yen, and that's ultimately because not only have we just spoken about the Bank of England's interest rate decision, and of course that news will be factored in over the course of today, but as well as that we of course had the Wednesday inflation rate figure recently released. Released on Wednesday, so very recent. And then today we're seeing the Japanese inflation rate figure. So all of that data will then kind of be priced in, I think, over the course of today, and we'll really start to see where the kind of true market value for pound yen does lie, as we are currently kind of stagnating around the very top level for pound yen, those kind of all-time high levels, very near the 201.59 level. So it will be interesting to see whether that inflation figure from Japan can actually push pound yen over the lip and break above therefore that recent high. So definitely keep your eyes on pound yen. Next talk about though is Bitcoin, which did once again react to this key liquidity zone, did kind of retrace back on itself and react to this key liquidity zone over the course of yesterday. So it will be interesting to see whether now we can see a sell-off to the downside. But then again, we've kind of seen price interact with that level 3 times now. So arguably, we're now forming a range and we're not kind of preparing for a sell-off further to the downside. So definitely keep your eyes on Bitcoin. Next talk about though is gold, which has made a very significant move after kind of sitting within this flag for quite some time. I did note how that was kind of representing a bearish flag, but then once we started to see this kind of sideways consolidation movement within the flag that was allowing the price to break out of this bearish flag, we did start to kind of presume a breakout to the upside was something to be expected. I did note how we were looking at a potential break, hook and go scenario for price, and that's really what has played out. Now we can dial down on the 1 hour with price kind of swinging to the upside, breaking out of that bearish flag on the 1 hour, out of this kind of key consolidation zone, and then price did hook back on itself to interact with that consolidation area once again before then completing that swing to the upside. Now we're very much nearing those key liquidity zone levels that I've noted before that price has interacted with, last around the 7th of June. So definitely keep your eyes on gold. Very interesting moves being made. I think now we're going to have to start to kind of draw this next fib to see whether price could be, continuing a downswing, or in fact, are we now on the upswing? So definitely keep your eyes on gold. Lastly, to talk about though is oil, where there's not much to say because price is just consolidating between these two key liquidity zones, the support and resistance levels, and yeah, not too much is happening. But of course, news within the Middle East and even to do with Russia's invasion into Ukraine is massively affecting oil, and so definitely any kind of news to do with the regional war with Israel and Lebanon and that kind of thing will definitely spark some bullish price movement for oil. So definitely listen out for any news to do with that. Last to talk about though is the economic calendar, with the lots of economic data coming out today, with the Aussie manufacturing and services figure being released, as well as the British consumer confidence figure. Followed by that, receiving the Japanese inflation rate figure, as well as the British retail sales figure. Followed by that, receiving the French business confidence figure and French manufacturing and services figure. Followed by that, we're receiving the German manufacturing and services figure, as well as the British manufacturing and services figure. And to end off the day across the Atlantic, we are receiving the Canadian retail sales figure with also the US manufacturing and services figure. So lots of economic data to listen out for today, and lots of manufacturing and services figures to listen out for, as we are also, I did miss out again, the Eurozone manufacturing and services figure as well. But that's all we to cover on the economic calendar. We've got lots in the articles, lots in the charts, and lots in the economic calendar. Just a quick thing to note on the economic calendar. Once again, I kind of did a repeat of yesterday's economic calendar, as I picked today's economic calendar when I was talking about Thursday's economic calendar. So that's why we're covering it once again. I apologize for that. I'll make sure I don't do that again. But just to reiterate, of course, none of this is, of course, financial advice. You, of course, all know that. But yeah, that's just something to end off with. But yeah, I'm waffling now. See you later. Bye.